In a shoebox in your father's closet, 3 weeks after his funeral, you find a single folded piece of paper that doesn't belong with anything else in the box. It's a credit report, dated 31 years ago, his name at the top, a number circled in red pen halfway down the page. You don't understand yet why he kept it, why he circled that specific line, or why, out of everything he owned, this one piece of paper survived 31 years of moves and boxes and a life that eventually had very little to do with whatever this number used to mean. You put it aside. You don't think about it again for years. But it's waiting for you, quietly, at the end of this story, and by the time you get back to it, you'll finally understand exactly what he circled and why. You are 19 the first time a number like this enters your life at all. You apply for your first credit card in a college bookstore line, mostly because the table offering free t-shirts made it look easy, and a week later, a letter arrives that you don't fully understand. Declined. A score listed near the bottom, somewhere in the low 300s, a number you didn't know existed 7 days earlier and now can't stop thinking about. You call the number on the letter, confused more than upset, and a representative explains, in the flat, practiced tone of someone who's said this 1,000 times, that you don't have enough credit history for them to trust you yet. This is the first time you encounter what will turn out to be one of the strangest features of the entire system. You need credit to prove you're trustworthy with credit. And you can't get credit until you've already proven it. For a while, this doesn't bother you much, because at 19, none of it feels urgent. It becomes urgent 3 years later, in a way that catches you completely off guard. You are 22, out of school, and your first real financial year turns out to be harder than you expected. A short gap between jobs. A medical bill you didn't see coming and couldn't pay in full. A credit card you'd finally gotten approved for, maxed out during those few tight months, and one payment, just one, that slips past you during a week you were focused on far more urgent things than a due date buried in an app you rarely opened. None of these decisions feel catastrophic in the moment. Each one, on its own, seems like the kind of small thing anyone might let slip during a hard stretch. But the system doesn't read them as small, isolated moments. It reads them as a pattern, and by the time you check your score again, it's dropped into the low 500s, a number that feels less like data and more like a verdict. This is where the shame starts, and it's worth naming clearly, because almost nobody warns you it's coming. A low score doesn't just close financial doors. It starts to feel like a permanent character reference, something that follows you into rooms and quietly announces itself before you get the chance to explain the medical bill, the job gap, the one missed payment during the worst month of your year. You start describing yourself, in your own head by the number, the way you might describe yourself by a diagnosis. Not, I had a hard year. Just quietly, I'm bad with money. Even though the truth was considerably more specific and considerably less damning than that. The lowest point arrives at a car dealership when you're 24, sitting across from a salesman with someone you're trying to impress a little, a specific, ordinary embarrassment made worse by an audience. The finance manager steps out to run your application, comes back with a face that's already told you the answer before he says a word, and explains, gently enough, that they can approve you, but only with a rate that makes the whole car nearly unaffordable, or with a co-signer you don't have. You leave without the car. The drive home is quiet in a very specific way, the particular silence of being evaluated by a number you didn't fully understand and finding out, in real time, in front of someone, exactly how little that number currently trusted you. Something shifts after that afternoon, not dramatically, but steadily, the way most real change actually happens. You start paying attention to the mechanics you'd ignored for years, not the theory of credit, just the specific, boring habits. Paying every bill on the exact date instead of whenever felt convenient. Keeping balances low instead of near the limit, because it turns out the system watches how much of your available credit you're actually using, not just whether you eventually pay it. You stop applying for every offer that lands in your inbox, because it turns out each application leaves its own small mark, whether or not you're approved. None of these habits feels significant individually. Each one is almost embarrassingly small compared to the size of the number you're trying to move. For nearly 2 years, almost nothing visible happens. Your score creeps upward in increments so small you miss them if you check daily, which is exactly why you eventually stop checking daily at all. This stretch is the least cinematic part of the entire story, and it's also the part that actually does the work. There's no dramatic turning point during those 2 years. There's just a slow, unglamorous accumulation of ordinary decisions, the kind that never makes it into anyone's highlight reel, quietly rebuilding something that took one hard year to damage and takes considerably longer than a year to repair. By 27, you cross into the 600s for the first time, a range that feels almost anticlimactic compared to how much dread the low number used to carry. Nobody applauds a 600. It doesn't come with a car dealership redemption scene. But something does change, quietly, in how the world responds to you. Apartment applications stop feeling like interrogations. A credit card offer arrives with terms that don't feel punitive. The specific dread you used to feel handing over your information, the flinch while waiting for someone's face to change as they read a screen, starts to fade, not because you've forgotten it, but because it stops happening. Your 30s bring the number past 700, into a range you'd once have considered unreachable, sitting across from that finance manager years earlier. This is the range where the number stops being something you think about constantly and becomes, instead, something that simply works quietly in the background of your life, opening doors you don't even register as doors anymore because you walk through them without resistance. A refinanced loan. A better rate on an ordinary purchase. A landlord who barely glances at your application before handing you the keys. Nobody explains, when you're 19 and confused by a rejection letter, that the entire arc of this number is really about trust, slowly and repeatedly earned, until the system stops asking you to prove yourself every single time and simply assumes, based on years of evidence, that you will do what you've always done. It's in your late 30s, applying for a mortgage on a house you actually intend to grow old in, that you finally think about the folded paper from your father's shoebox again. You dig it out, more out of curiosity than anything else, and this time you actually study it properly. His number, from 31 years earlier, sits in the low 600s, the exact range you spent your late 20s climbing out of, on your way towards something higher. The line he circled isn't the score itself. It's a note further down the page, a single sentence about a missed payment from a hospital bill during a year, based on the dates, when you would have been about 6 years old. You sit with that for a long time. Your father, who you'd always known as careful, deliberate, someone who paid every bill the moment it arrived, had once been exactly where you were at 24, sitting in some version of that same quiet dread, carrying a number that didn't reflect who he actually was, just one hard year he never talked about. He never told you this story directly. He didn't need to. He kept the paper instead, for 31 years, circled in red, a private reminder to himself of a number he refused to let define the rest of his life, and apparently never got around to throwing away, even decades after it had stopped mattering to anyone but him. Here's what almost nobody tells you clearly about a number that follows you from 300 to 850. It was never actually measuring your worth. It was measuring your habits, narrowly and mechanically, with no interest at all in the medical bill, the hard year, the version of you who was doing the best you could with what you had at the time. The shame that gets attached to a low score isn't built into the number itself. It's something people quietly add on top of it, usually during the exact years they're most vulnerable, and it's considerably harder to unlearn than the number itself is to repair. You finish the mortgage application later that week. Your own score, when it finally comes back, sits comfortably in the range your father never quite reached, not because you were smarter or more disciplined than he was, but because you had more time, and maybe because some small, unspoken part of you had been carrying his circled line the whole time without knowing it, refusing to let one hard chapter write the rest of the story. You fold the paper back up and put it in a drawer, not because it stopped mattering, but because you finally understand exactly what he was trying to remember, all those years, every time he saw it. Not the number. Just the fact that it eventually changed.